welcome to the Daily Insights That Matter. Now, Morgan Stanley has recently made some noteworthy moves in their stock market ratings, particularly regarding India. Now, the latest development is that they have upgraded India's rating to overweight, indicating a strong belief in the country's potential for growth. Now, this means that Morgan Stanley is recommending investors to allocate a higher proportion of their portfolios to Indian assets such as stocks and bonds compared to the other countries. Now, this decision came just 4 months after they assigned an equal weight rating to India's domestic stock market. Now, what's more encouraging is that India has climbed from the 6th spot to the top spot in the Morgan Stanley's rating. In contrast, Morgan Stanley downgraded Australia to underweight and adjusted the ratings for MSCI China and Taiwan from overweight to equal weight. So why is Morgan Stanley so bullish on India? Well, there are several compelling reasons behind their optimism. They've been observing some significant structural reforms happening in India over the past few years, and these reforms are starting to show positive results. Moreover, supply-side policy reforms like corporate tax cuts and PLI have also contributed to the positive outlook. Plus, the progress in infrastructure development and the formalization of the economy have played their part in boosting confidence. Experts seem to agree with Morgan Stanley's upgrade of India. They see it as a justified and a positive move, and they believe India is currently in a favorable position to attract a healthy flow of foreign funds, all thanks to its robust economic outlook. Now, this upgrade by Morgan Stanley could create very favorable investment climate for India and is likely to boost the foreign capital inflows into the country. So it's quite encouraging news for India's economy and the investment landscape as a whole. Now, in an unexpected turn of events that sent shockwaves through India's tech industry, Foxconn, the world's largest contract electronics manufacturer, announced its decision to withdraw from the $19.5 billion joint venture with Vedanta to make semiconductors in India. Now, this development had raised many questions about the future of India's semiconductor ambitions. However, the situation isn't entirely bleak as such. Foxconn has simultaneously introduced plans to invest $600 million in Karnataka, signaling a potential revival for the nation's semiconductor field. Now, this investment will concentrate on crucial components and advanced chip manufacturing machinery. The allocation of $600 million investment is divided between two projects. The first involves establishing a $350 million iPhone component facility predicted to create more than 12,000 job opportunities. The remaining $250 million will be dedicated to a partnership with Applied Materials focusing on the production of chip manufacturing tools. Now, even though the agreement between Foxconn and Vedanta fell through, Foxconn has displayed a strong desire to amplify its business endeavors within the country. Furthermore, Foxconn remains dedicated and is presently evaluating potential collaborators in order to implement a $10 billion strategy that involves providing incentives of up to 50% of the initial capital expenses for projects related to semiconductor and display manufacturing. Now, given the escalating geopolitical tensions prompting businesses globally to seek alternatives to China, India stands to gain significantly. Now, this shift has the potential to enhance India's self-sufficiency and self-reliance and contribute to the realization of the Make in India objective. With that, this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com